This is your Fox 5 News.
Well, they looked happy when it began, but it was a gut-wrenching day on Wall Street today as investors watched one of the wildest roller coaster rides in years. The Dow fell as much as 460 points at one point, or nearly 3% in early trading. At the closing bell, though, the Dow was down 173 points. Here to talk about what's going on here and if investors should be worried is financial advisor and author Laurie Itkin. Thank you for being here.
Glad to be here.
Well, roller coaster, a very good description here. What caused this undulating ride today?
Well, it's been like this all week. We've seen volatility in the stock market that we haven't seen in quite a while. I mean, what's not going on? We have Ebola, we have low oil prices, we have concerns about a global economic slowdown. There's lots of things to be worried about. But on a day like this, instead of being worried about your portfolio, it's really a time for investors to buy. They can buy quality dividend-paying stocks on sale. I mean, let's use the Ebola as an example. Horrible thing happening with Ebola. But all airline stocks today were down, and they were down a lot. No matter which company you were looking at, they were all down. We saw the same things with the SARS epidemic several years ago. People were concerned about flying, and the airline stocks suffered, but then they rebound. So look at sectors that are down. When you're an investor on a day like this, it's your opportunity to buy good quality stocks on sale.
So the spin on this is that it was a good day for bargain hunters, but it was the worst 3 days since 2011, and October has a reputation for the most part historically as having the most market declines. Why is that, and did stocks recover enough before the closing bell today?
Well, you know, there are things that people say October is a bad month. It's not always a bad month. I think what's more important is today we did fall at about 450 points down on the Dow earlier today. And you're right, we did recover some of that gain. But, you know, what we were doing at Coastwise Capital Group is we had we put up our caps on, we got our bats out, and we were ready to play ball. I mean, this was a day where any cash we had on the sidelines from our clients, we were putting to work. So, you know, I think what most investors need to understand is that, you know, Warren Buffett always says, you know, be fearful when everyone's greedy and be greedy when everyone's fearful. What investors should have been doing over the last year, where we've seen gains in the S&P of 30% in 2013, is that that's the time when you really should be taking some gains off the table. When you have stocks, it's like going through your closet once a year and weeding out things that are no longer of value.
So, Laurie, then is your advice then for those who watched Wall Street today who live on Main Street then is to take a closer look at your 401k and other things in your portfolio and make some adjustments?
Well, look, if you're a long-term investor, you don't necessarily need to make any changes. But if you are concerned and you have some stocks that have gone up in value, what you can do is put a stop loss so that, for instance, if tomorrow the market rebounds, you don't necessarily sell your stock, but if the market goes down even further, you get out at a price that's hopefully still profitable from where you bought it at. And then you need to take that cash and don't sit on the sidelines very long. You need to deploy it and buy quality stocks. And it's not just U.S. stocks. I mean, there are global stocks, emerging markets, and international stocks where prices are depressed right now. And this is your opportunity to get them at 10, 20, 30% off.
Well, let me ask you real quickly then about some of the things that did spook investors that you mentioned earlier, talking about the economic figures coming out of Germany and Europe. That's their largest economy there, the oil prices, Ebola, all of that. So do we just need some good news to really rebound as a whole on Wall Street, or what are you thinking?
Well, we've got a lot of economic things going on. I mean, one of the reasons why stocks have been on such an up tear for several years is because the Federal Reserve Board has been keeping interest rates artificially low. And so investors who normally went to bonds can't make much money on those, or people in savings accounts, they've had to go to riskier assets like real estate and stocks. So what's going to happen, though, we know the Fed is probably going to start raising interest rates sometime next year, and that could depress stock prices even further. So investors really need to be watching, look at their portfolio, keep good stocks, and if there's an opportunity to take ones out where they don't think there's much growth potential, look at the fundamentals, then this is the time to pare down and reallocate.
All right, jettison those ones that you think aren't going to work for you. All right, Laurie Itkin, thank you for your insight today. We sure appreciate it.
Thank you.